Good day, ladies and gentlemen. So in my last video I promised I'm going to teach you the big pin theory. So this is the video where I get to explain how the theory actually works. Okay, so first things first, let's say you have a candle this way. I want to give you the criteria you need to sieve out your pins, okay, because there are so many pins in the market. So which one is actually the big pin theory? Which one are you going to use as your big pin? Good. So let's say you have a bearish candle like this. Pretty much I'm gonna use this to explain. Okay, now the very first criteria for you to identify your big pin is that this sharp part, or the wick, okay, which is the wick of the candle, this sharp part has to be almost half. Okay, it has to be almost half of the full candle. Almost half of the full candle, almost 1/2 of the full candle. So if the full candle from here to here is probably, let's say, 10 pips, you expect it's expected for that wick to be at least, let's say, 3.5 or 4 pips. Okay, so the wick has to be almost half of the full candle. All right, hope you get that. That's the first criteria for you to identify which one is your big pin. So second criteria, the other end of the pin, talking about this end, the other end should not have a wick. Okay, imagine you holding a pin and the pin has two sharp ends. It doesn't make sense. So it should not have a wick, or if it's going to have a wick, the wick should be so small that you would need to strain your eyes to actually see it. Okay, you know, there's no perfection in the markets. Okay, so sometimes the big pin can just have a very small wick up there, but the wick should be so small that, you know, you need to zoom in before you can see it. All right, but if the wick at the other end is obvious, then it's not the big pin that you are dealing with. That's the second criteria. So the last criteria is that if the pin is a bullish pin, meaning it has a bullish color. My bullish color on my chart is blue. Okay, so on your own chart it might be green. All right, so whatever color your bullish candle is. So if the pin has a bullish color, the sharp part has to be pointing upwards. Okay, this one I have on this chart right now, this right here, this particular one is a bearish pin. So if the pin has a bearish color, then the sharp part has to point downwards. So those are the three things you need to know. First criteria, your pin, the sharp part of the pin has to be almost half the full candle. 1, 2, the other end of the pin should not have a wick, or if it's going to have a wick, the wick should be very, very small, to the point that you would need to zoom and zoom and zoom before you see it. But if you can see it easily, it's not the big pin. The third one is if you're dealing with a blue color pin, which stands for bullish pin. Okay, on my own chart, on your chart might be green pin. If you're dealing with a green or blue pin, the sharp part has to point upwards. If you're dealing with a red pin, bearish pin, the sharp part has to point downwards. Now the idea behind it is, let's say I have a red color pin pointing downwards like this. What we want to take advantage of is the fact that price, once this closes, you know, the close, the C of this candle is right here. That's the close of the candle. Okay, that's the close of the candle. The open O is right here. It's opened, moved down. This is the low. In this case, the open tallies with the high. The open tallies with the high right here. So it's moved below, created this low. Okay, created this low and then closed here. Once this candle closes, you know, it's a red candle. Once it closes, what we expect is for price to move and take out this liquidity. Okay, that is what we are trying to take advantage of. Sometimes when the next candle opens, it could trade down a bit, you know, giving us this manipulation move. Then later it will come up, but most times it will surely come to take out the liquidity of the other end of your big pin. All right, so that's the idea. And if you're dealing with a green or blue pin, let me see if I can change the color quickly. Let me use green, because most people use green on their chart, but I prefer blue candle. If you're dealing with that, you have this way. You have the wick. So when the next candle opens, or series of candles, what you expect is for markets to come to this level and take it out like this. All right, so that's the idea behind it. So you want to tag along in order to make money while market is coming to take out the liquidity resting below this level. Okay, so I have, I think, 2 or 3 examples marked out for you. You have a cluster of pins right here. I took this trade yesterday. This is the trade I took that I used to make that video, this particular one. Okay, let me change the color of this. I prefer the red one. Okay, so what do we have right here? Look at this pin. Look at this. You would notice that the sharp part is almost half the full candle. Okay, that sharp part is almost half the full candle. And you would also notice that you have almost no wick. You know, there's this very, very small wick there, but it's not very easy for you to see. Okay, below it, so it qualifies as a pin. Therefore, when market opens, we are expecting this level to get taken out. This level to get taken out, and that's exactly what happened. So yesterday I took advantage of it. While price was coming down, I quickly tagged along, placed my stop loss just above the highest point of that candle, and I traded it down till, you know, I took my profits. The video is recorded. You can watch it if you have not seen it. It's the previous video I recorded before this one. Okay, so next one was also a pin. Okay, this is also a pin right here. So it's like a cluster of pins taking place here. It doesn't happen like this often. You can see that the wick is almost half the candle, the full candle. So you expect price to do what? To come and seek out liquidity at the other end of that, and that's basically what happened. You can see price gave us bullish move that took out that liquidity, creating another pin. I don't know what happened for us to be having a cluster right there. All of this happened yesterday. So we had a cluster of pins. You can see that this one also formed a pin because it had little to no wick at the other end, and the wick above it. Remember, the blue candles, the sharp part has to point upwards. Hope you are taking note. You can see that the red one here was pointing downwards, so you need to be taking note of that. All of these are the rules I've given you. You have to follow the rules. Okay, so we expect market to come and target liquidity below that blue candle, and that's what happened. You could have tagged along. Once you see the market is moving in your direction, you can tag along, place your stop loss above the highest point the candle got to, and target the liquidity at the other end of your big pin. Okay, there is one more. So you have a single pin here. There is no cluster this time around, just a single pin standing on its own. Okay, so you had this. Let me look at this. This could have passed for a pin, but the sharp part is not almost half the full candle. It looks kind of small, so that's one thing that disqualified it. Another thing that disqualified it is I can obviously see the wick that is under it. It's kind of big for me to ignore it and say it's a very small this thing at the other end. Though it's played out, if you've made a mistake to choose that as your big pin, it's played out. You can see the market targeted this other end of it, you know. But sometimes we need to stick to our rules. So this one, that big red candle, is a good example of a big pin, because you can see at the other end there is almost no wick there. I can't see any wick right there. And also this is almost half the full candle. Talking about the sharp part, it's almost half the full candle. It doesn't have to be half, but it's almost half the full candle. So we enter our trade. We wait for market to move in our direction, then we enter our trade. You can see market move down a bit. That's why we have this wick down here. So market move down a bit, then you are not to enter. When it start moving in your direction, you enter, place your stop loss just below that. just below the end it got 2. SL can be somewhere there. Okay, then you target where? You target this other end, because market you want to move towards that, and you can see what happened. Market moved and took that out. Okay, so if you got any value, please subscribe and turn on the notification bell. You got a question, you can ask in the comment section. I'll see you in the next video. Thanks for watching.